Hello and welcome to this week's edition of Murphy's Market Minute with Elliot Omundson.
And Nathaniel Vossman.
As our second take, we used an Army word, so we're refilming.
Yes.
Oh, and now my phone's ringing. All right, the day's going fantastic. It's Friday.
Yes.
Hope you all have a fantastic weekend ahead of you. It's been a pretty good week in the markets. All 5 major indices.
Yes.
Yeah, I also messed that word up earlier. Hence, then became the swear word. So, are all up, right? So, nothing major. I think the S&P's up 1.1. Nasdaq gained about 0.8. Dow climbed 0.8. Russell 2000 added a half a point. But all major indices closed at record highs, right?
Yep.
Market volatilities remained relatively subdued. Despite some headline risk. We're going to get into some of those. You want to hit on some of the trade front?
Yeah, so 3 new trade deals announced this week with Japan, Indonesia, and the Philippines. And I think Japan's the big one. So, and it's coming in softer than expected. I know, they're looking at I think 25% tariffs. And now the newly announced trade deal is going to be 15% on Japanese goods coming into our country.
Yep.
And so, like I said, softer than expected, which, I think the market reacted relatively well to. And then Indonesia and Philippines are a little bit smaller trading partners, but those are about half of what was expected. And they ended up at 19%.
Yeah. Now, there are still some looming tariff deadlines. The August 1st deadline, which nobody really knows how serious that deadline is. But there's a threat to raise the tariffs on Canada to 35%, and that's still kind of clouding a little bit long-term outlook.
Yeah.
We had some good, it was an all positive earnings reports, but the earnings season's ramping up, and Alphabet posted strong results. Tesla disappointed on delivery numbers due to its reputational and political strains. And their refresh of the Model Y, I don't think had as big of an impact. It was the number 1 selling car in the world, and it's fallen to Toyota again, which I don't know how much that stuff matters. It's like, one car company's top, and Toyota was for a long time, and it was pretty stunning that Tesla dethroned them for a short while. Intel dropped.
Yeah, pretty big.
Yeah, they're doing 15% workforce reduction. So a lot of if you're needing to hire tech people, now might be a good time.
Yeah, a lot of them out there now.
Yeah. There are a lot of analysts warning of euphoria in the markets, trying to draw some parallels to the .com and the 2007 bubbles. I know margin debt has surged. It's now exceeding $1 trillion, which is nearing .com era levels as a percentage of GDP. And so that is creating some red flags around credit stress and market overheating and whatnot. One of the things, though, that I think they always fail to take into account when they're looking at these bubbles, or they're looking at valuations of companies and how we're pretty far outside of the normal price to earnings ratios. But there's inflation in everything. When the government prints tons and tons of money, which they did in COVID, I think it was $5 trillion, you're devaluing everything. And so there's more capital to go in, which creates that wider gap, I think.
Well, yeah, and I also think the whole PE argument is kind of dumb too on the surface, just because PE, you're looking at probably the trailing 12 months or the forward-looking 12 months. But when you got companies that are expected to grow earnings pretty exponentially for years to come, I mean, that's going to factor into a higher PE ratio now.
Yep.
Because you're baking in expected returns, not in the next 12 months, but the next 5 years, 10 years. And so, of course, it's the PE ratios on some of these big tech companies are going to be high and higher than historical averages, but it means a whole lot of nothing compared to having a high PE ratio if there wasn't, this expected growth. Now, the growth doesn't come to fruition here. Obviously there'll be a contraction in PE, and then stock prices will come down for those companies. But if the growth plays out anything like it should be, then the whole argument about the market being a bubble because these PE ratios are just completely missing the entire point.
Yeah, yeah, absolutely. And I think Tesla's an excellent example of that. Not that they're succeeding very well, but they did roll out their robotaxi based, not the actual robotaxi itself, but the robotaxi concept based on the Model Y in Austin. And I just remember a while back listening to one of their like top people explaining how like every one of those cars they manufacture and sells worth like $3,000 to them. But once the robotaxi actually becomes real, they become worth $80,000 per car sold to them.
Yeah.
Pretty stunning.
Yeah.
So if they do accomplish it, and I'm not saying they're close, or I know Waymo's supposedly got the advantage on them in the short term, but I can't help but think the amount of data that Tesla gathers from all their cars is going to tilt the odds in their favor at some point.
Yeah, and something like that's extremely high margin. So it's like, talk about earnings growth. Like that would be a tremendous opportunity for earnings growth within Tesla.
Yeah, exactly. So everybody is expecting the Federal Reserve to keep rates steady. There was a funny blip from Trump and Powell touring the ridiculously over budget overhaul of the Federal Reserve building. They're $1 billion over budget, like every government project. And somebody asked Donald Trump what he would do as a real estate person if somebody was that over budget. And he's standing right next to Powell and he goes, fire him. And you just saw this look on Powell's face, and it's just like, that guy's probably so sick of Trump.
Oh, yeah. He's rolling his eyes at that point.
Yeah. So there's still pressure on Trump, still friction between the White House and the Fed leadership. You do have, and we've mentioned it in the past, Governor Waller has been pushing for rate cuts. I'm kind of with him on that. But yeah, so overall, good news on the tariff front, good news in the stock market, bad news on elevated debt, high valuations, speculative excess, which could create a pullback or a correction, if you want to call it that.
Yeah.
There's still some more trade talks, Canada, EU, South Korea. While we were sitting here, a little thing popped up saying that the trade talks with the EU are like 50-50 at this point.
That's kind of what I've heard.
Yeah. And then we have earnings updates coming from Apple, Microsoft, Amazon, and Meta.
I think those are all next week, right? A lot of them.
Yeah, I think so. Along with employment data and inflation figures. So next week should be a pretty big week. And it could have an impact to either reinforce, the bullish momentum or.
Yeah, I think this week was off to a good start because I think Tesla was expected to miss, and then have post pretty poor numbers, and they still continue to miss. But Google really was pretty robust, and so I think that's going to be a pretty good indicator, at least with the other Mag 7 companies next week. So
yep. So, anyways, we're just kind of watching things. We are also working on some stuff in the background that I'm pretty excited once it's fully operational and rolling out that I think everybody will really like. So stay tuned for those. And until next week, this is Elliot.
Nathaniel?
Signing off.